Welcome back to another episode of In Depth and Out Loud with me, Dubbz. Today with me, Gift Pule. Well, we don't call him doctor anymore, he says, because he no longer practices. But we're going to be talking all things financial management with him. Currently, he works for Sanlam and he is the principal there. And this is going to be quite an informative conversation because he also has studied human genetics, which is something I'm very interested in understanding a little bit more. Gift Pule, finally you're here. Thank you for joining us.
Thank you very much. Thanks for having me.
So can you just tell us about the human genetics study? Of course, I should be saying Dr. Gift Pule, really, right? And how does that tie in now with what you do now, financial management, and you being with Sanlam Private Equity?
Yeah, thanks again for having me. I called genetics my previous life.
Okay.
So I did an undergrad in human genetics and then moved over to medical school for my honors degree. Then did a clinical master's and then call it a PhD split site between UCT and Baylor College of Medicine in Texas. So I mean, it was a fascination, sort of understand humans and how we work from the most basic principles being, call it your blueprint, your genes.
A smart fascination, I might add.
No, listen, I guess it was a fantastic thing to do and understand, and we did a lot of good work. Published quite a lot of our work, sort of focusing on clinical trials for blood cancers, essentially, and blood diseases. But then after qualifying, I knew, probably during my master's, that I didn't want to sort of commit to that path, but I stuck to it and finished it. And then after sort of qualifying and coming back into the country, I went into asset management at Allen Gray. And since then, I've been in finance and investments. There's a few transferable skills that we can talk about, but it's not a big jump. It's just one letter, actually, from health to wealth. So it's
I like that.
Jump.
Okay, so tell us a little bit about, explain to us in the simplest terms ever, what is meant by financial management.
Listen, I think there's a few definitions there that's implied. I guess for us from an investment lens perspective, which is where sort of our bread and butter is within the Sanlam Private Equity ecosystem, it's probably the best lens that we have as investors into the company. So you obviously have your basic statements that everyone wants to see. There's implied sort of governance levels in there. But from an outsider, as a non-exec into these businesses, you do want good financial standing in a business. And you get a sense of it from, call it your FM processes within a business. Those can range from a variety of, call it processes that are largely led by a CFO and their team. So it's what we think is a lens into the company. And it's various practices within accounting and finance, but it's applied accounting, if you can call it that.
So what would you say is the importance of financial management in a business, but also for students who are just starting out, who've just graduated and they're entering, the world of adulting and getting their first jobs?
Well, I think from a business lens, it's important, like I said, from an investor's perspective. But when you start to bring it a bit closer to home from students, from a personal perspective, listen, I guess financial education is not something that everyone gets at an early age. But personal financial management is essentially that, learning how to appreciate the value of an asset versus going and fetching liabilities off the base of, call it a thin income line, i.e. you have your first salary and it looks rosy, and then you go and you get a massive liability for that income. So it's about balancing, i.e. creating a balance sheet of substance, creating an asset base versus going around town, creating a bunch of liabilities for you to service over a 20-year period. Hence, bonds tend to be that long.
Yes, exactly.
But it's about applying what you learned from a theoretical perspective in class and bringing it to home in your own personal life, outside sort of business and corporate.
And how do we differentiate between financial accounting and managing accounting? And is the difference important?
It is. I mean, I think management accounting is sort of your procedural stuff. So I mean, the guys that would have studied accounting would know all about the changes that are implied in IFRS or US GAAP. That's sort of standards in the market.
Yeah.
But I think financial management is where you transcend the data and you create information out of it. You're enabling, call it management, to be able to make informed decisions based on the financial standing of a business. So call it the difference between skills and expertise. One is call it one layer above the other, in my view.
And how do financial managers then assess the financial performance of a company?
Listen, there's a variety of ways. Your typical would be, call it your insolvency tests, your liquidity tests, various sort of accounting type ratios that help you understand whether the business is in good standing or not, the ratio between your current assets and your liabilities. But then you take it a step further and you say, as an investor, you're asking yourself, how can I put my money into this business and it creates value for the people for whom I invest or I plow their money? Those are typically returns. So returns on equity, returns on invested capital, or essentially the business's ability to create what we call free cash from its asset base, i.e. revenue is fantastic, but what amount of cash is generated from that revenue, i.e. your EBITDA less your working capital, interest, expenses, etc., and importantly your capex, the spending that you must spend in order to grow the business, and what cash remains to be distributed back to investors. Those are typically the lens through which we look at these businesses and say, how do we make sure that we enable ourselves to make the right decisions based on financial management and accounting principles and
I think, is that how you also then evaluate your investment opportunities?
Correct.
In the same kind of fashion?
In the same kind of fashion. And again, I mean, if you make an example and you say a business that is labor intensive, asset heavy, let's make it an example like a mine.
Okay.
Versus a business that is in financial technology that has very little assets, probably a lot of intangibles in, call it soft assets that would sit on a balance sheet. Those businesses would have very different metrics in terms of how you measure them, right? But it's sector specific, but also above that, you should be able to use these tools to find the cream above each of those cylinders or each of those industries. You're using the same tools, but the ratios and what you expect would be different.
There's something you mentioned, you spoke about liquidation, and I know, a lot of people will get into a business, you start a business, a lot of students might even have, the passion that they want to be entrepreneurs, and then it comes where, unfortunately, the business financially is just not making any financial sense, and one would then opt for liquidation, right? And I realize that a lot of individuals don't quite understand how liquidation works and also the consequences of liquidating, because it kind of like feels or sounds like a solution when you're in trouble financially as a business. But I learned that when you liquidate, you still need to pay the company that's assisting you.
Correct.
With liquidation. And now sometimes some companies would not have a lot of assets under the company to perhaps use as a front payment for this liquidation. So if you don't have the assets, then you essentially can't liquidate.
Then
right?
There's nothing to liquidate.
Then there's no, but a lot of people do the liquidation so that they can avoid paying debts, isn't it?
They do. So
more than anything.
More than anything, because you do have sort of different rankings of your creditors.
Yeah.
Some. I mean, if you're a formal, slightly larger business, let's say you have leverage finance or term debt from some of the bigger banks.
Yeah.
Typical in those facility agreements or the agreements that you enter into, equivalent to a bond or whatever, a car loan, they're a lot more sophisticated. They would come for those assets before you get to paying other creditors like your suppliers, like retrenchments packages, etc., etc. So the bigger you are as a company, the more difficult it is to get liquidated, and hence you typically have an appointed firm that runs with that curatorship to make sure that me, Gift, the owner of the business, I'm not actually using liquidation as a tool to run away from fulfilling my commitments to my creditors. So it's a bit more regulated than people tend to
Absolutely.
think.
And what ethical considerations do you think should students be aware of in financial management?
When you think about your ethical considerations, I mean, you are now giving information out into the market or to a board or to shareholders that are not in the business. It's easy to think that you can cook the numbers. Quite easy. But at some point it catches up with you, not only because it's your own career, and no one tends to trust people that break trust.
Exactly.
But importantly, you don't want to put the company into disrepute. You are sort of also a product of, for instance, where you studied. You also what happened probably a few years ago with PwC and the exodus that that firm had once they were embroiled in some of the state capture chamors that was happening.
Yes.
So it hurts not only you as a personal, i.e. a professional, it hurts the profession of what you do, and it can hurt, call it the industry that you touch, because every firm that was audited, for instance, by PwC, everyone was looking at those financials like, what's going on here? And even some of those businesses didn't have anything wrong with them. And you had some really good professionals leaving a firm that was highly reputable.
Because of that one incident.
Because of one incident. So there's a lot of ethical considerations, and I think it goes beyond just doing your job and doing it right. It's an interlinked market and sort of an ecosystem of trust that everyone must subscribe into.
So, you know, if you have a business and you're applying for a loan or you're trying to apply for a bond, they would naturally ask you for your financial statements,
your pay slips,
all of that. And it's mostly, in this case, it would be 6 months as opposed to 3 months for an individual who has a pay slip. But can you explain to us what a financial statement is? Very simply. Because you would think that people know what it actually is and what it's really needed for.
From a company perspective or from an individual perspective?
Let's do it both.
I mean, from a company perspective, financial statement, you're almost talking about the three sort of intertwined statements of financial position, i.e. your income statement, balance sheet, and cash flow. What that is a representation of what you sell, how much it costs you, what you have to pay to generate that income, and the capital you need to invest in the business in order to create a sustainable business, and your ability to fulfill other objectives outside the company, such as returning capital back to your investors and growing. So that's on the company's side. That's very important because typically when you look into a business, that's typically the first things that we want to see, right? Your financial statements. Similar in your personal capacity. You want to show that, listen, there's a top line. There's a consistent income that comes in at the top.
You can trust me.
You can trust me, but more importantly, can we trust your financial decisions, i.e. the types of expenses that you put onto your lifestyle, and essentially a test of what is disposable as an income outside of all the expenses beyond your earnings ability. And I guess maybe the last point to add there from a personal perspective is similar as in business. You want to, as early as possible, have diverse income streams. So I think the youth now call it side hustles and side gigs.
I hope you're listening to this one. Side hustles, multiple streams of income.
Correct, because if one goes belly up, then you know that you've essentially hedged yourself. It's the same as any company. No company wants to have one customer,
Of course.
or one contract.
Don't survive.
Try not to rely on one employer, if you know what I mean. So a side hustle over the evenings and during the weekends is also advised.
Beautiful. So, you mentioned something earlier on that once you're out of school and you start working and you get a great job and you're getting paid really nicely. And now you are doing all sorts of things. I mean, I remember I did that. I went and I opened all sorts of accounts. I don't know for what good reason. And one day you find that, you've got so many things to pay. And now it's like you broke every month, and it's not that you're not being paid well. It's just that you're not living within your means.
Yes.
Can you just give students a tip on that specifically, the living within your means and unnecessary credits all over the place? Obviously, I know when you get your first job, the first thing, and you're trying to apply for a place, but you don't have credit history, and they're like, yeah, but I need to have a credit card. I need to open this clothing account because, Barry, I don't have credit history.
I mean, it's a valid question. I think I'll add a second layer to it of black tax and remind me to come to that point once I'm done. Because it's a nuance in many of our sort of early career stages and even later on in life,
100%.
Once you've established yourself. But credit worthiness is an important litmus test for all credit providers, because no one wants to take a risk on you. It's like the proverbial, I want to hire you, but I want you with experience. But no one wants to give you the first job. It's chicken and egg. But it's important to develop credit history, but it's with what kind of credit?
Okay.
I'll make an example. You can create the same worthiness with a data contract that is a 99 Rand per month, same as a 5,000 Rand item that's on your NCR profile.
Okay.
Why? Because what financial providers are looking for is your ability to pay and pay on time.
That's it.
Not the quantum. What's important when we're talking about the quantum is the disposable income, i.e., how much after all your living expenses do you have enough firepower to cover the thing that you're applying for credit
that you now
for.
require.
So it's important to have credit history, but again, not the
extremes.
big assets that we tend to go and fetch early on. And also to the point that I mentioned earlier, listen, we're not all blessed with the same sort of background where you come out of your first job and the entire salary can go to your own
as well,
sort of personal desires and the like. So again, having that appreciation is important so that you don't over leverage yourself while you know that there's still other responsibilities that you have to fulfill. Your tax.
Some people pay double tax, triple tax. There's family tax and there's the normal SARS.
No, of course. And listen, I think between you and I, especially those that tend to have more melanin than the average, we are a product of many sacrifices before us. And in order not to break that chain, we must play our part in, we call it tax, but someone else did it, hence we are now sitting here.
Yes.
So let's do it within reason so that we all move
Let's do it
forward.
with grace.
Do it with grace.
It does get a bit stressful sometimes, though.
No, it does. It does.
What are your top tips for students who are entering the world of work for the first time?
Probably two things. One is you want to be different. And it goes back to perhaps where the conversation started with me coming out of a medical sort of background. And I remember when I first interviewed for my job, I said to the CIO at the time at Allen Gray, listen, the first time I saw an income statement for longer than 3 seconds was last night. And if you're going to hire me, know that you're basing that financial background on that knowledge. 3 seconds last night. However, if you want someone that's been able to problem solve, write, convince people, and be able to talk to a point, I'm probably the right person. and I know for sure that I probably have more writing and publishing experience than most of the people in your team. So I'll speak to my strengths, but I'll highlight where I know my weaknesses are. So that someone knows that you're not coming in as a full package, but you know where your weaknesses are, and you know how to learn to close those gaps, but you put a premium on the things that you're good on or you're good
Love
at.
it.
Because if you don't, you walk into a room with imposter syndrome and then you say, ooh, I don't think I know as much as the other people do.
Yes, and often, Shem, we do go, even if it's not the first time you're entering the workplace, it happens even if you've been there, you know?
Exactly. But again, you are in that room bringing something that somebody else isn't. So if you only look through the lens of a cup half full versus half empty, it gives you that confidence to say, I know what I know, I'm here to add value, and also importantly, I'm here to learn. And I think maybe the second thing is to say, in the early stages, absorb as much as you can.
Yeah.
Sometimes experience is more than what you're actually doing. Because I know your first job is typically not the romantic. I mean, for people that watched legal shows, they would have watched stuff like Suits and think you're going to walk into court and be Harvey Specter.
And be incredible day one.
Grey's Anatomy. Listen, it doesn't work like that. But importantly, it's almost back to the initial point. I knew I wasn't going to practice, but I completed what I studied. Because I knew at some point being called doctor and having a PhD will open some doors. So what you start, you finish. And you need to sort of have that aptitude to want to learn and sort of diversify what you know. That way you can be a bit more different in every room that you walk into.
I love that. What you start, you finish. I'm going to ask you a few questions.
That's a loaded statement.
Very loaded. I'm going to ask you a few questions. One phrase, one word.
Sure.
Fave South African saying.
I used it earlier, gamors.
Oh, mine is Helang. Okay, we'll go with Gamors. Current song on repeat?
Current song on repeat, Denzel Unqethu.
Oh, okay. And words you live by?
Words I live by. Finish what you started.
Okay. Most important goal that you are working on right now?
At the moment,
Yeah.
quite a few. I smile because there's
I know,
there's
your
actually
face, like you just brightened up.
quite a few. We're building a very exciting business in Sanlam Private Equity.
Okay, excellent. And how would people describe you when you're not in the room? Do you
Calm.
think?
Calm.
I can feel it. I can feel it. Dr. Gift Pule, thank you so much for joining us today. It's been lovely chatting to you.
Pleasure.
And I think we're going to wrap it up today in saying that finish what you have started. Until next time.